David Lincoln Productions.
Hey, what's up, guys? I saw there were some people waiting, so I figured I'd just start slightly early because I know your time is valuable. No need to keep you waiting if I'm here and you're here. So, anyways, welcome to the show. This is the Long Vol Show Live, and I am Dave. And the reason it's the Long Vol Show Live right now is because I actually have a long position on now in the in UVXY, which is a great rare thing for me. If you're a follower of the show, you would recognize that I'm almost never long this stuff. And my rule of thumb is always only be long stuff for 48 hours maximum, because we know there's a multitude of reasons not to be long VIX stuff. However, I found myself this morning just really frustrated, as I'm sure some people out there are, with this market's kind of inability to sell off. It's like before the open today, let's look at the chart, but before the open today, it was like we were down overnight, and then the market just was like looking to just rally right back. And it's very frustrating when you're long volatility and you finally get a down move overnight, and right before the open, the market is just, every single person is just waking up and buying the dip. So you can see here's the action from this morning here. If we just look at this, so I woke up at like 4 a.m. and we were down here, and look, I mean, it's just every time we just rally right back. Look at the NASDAQ is highly positive now. It was down a little bit down here around 4, and then just rally. Everybody just wakes up. Oh, it's down. Buy the dip. Got to buy the dip. Anyways, I'm not going to talk too much about my frustration here, but let's talk about the position coming in. What I did, I chose to get long UVXY by buying some call spreads, and it was basically buying an at-the-money call in July and selling farther out of the money call. So I bought the July 30-40 call spread. So if we were to look at the option screens here, so here is UVXY. It was like 28 and change at close. Let me get out of the way. Here is a picture of UVXY chart, and you can see, yes, it's moving down all the time. That's why it's very risky to go long. But I felt that kind of the risk reward was kind of there to do this. And one thing that tipped me off yesterday was just that the VIX was up with the market up. Also, the VIX is at it was kind of like the lowest it's been in some time right now, right? Dipping below 25. And I just figured there was more room for this to have a little pop back up than to go down in my mind. And when you buy a call spread like the one that I purchased in July here, I ended up buying 28 of these call spreads, of which I've traded against this position already today. We'll talk about that a little bit more later. But this July 30-40 call spread, okay, it's a $10 call spread. The most it can be worth is $10, and I paid $2.09 for it. So if you're paying $2 for this spread, and it's got 38 days to go. So I looked at the price to go out to September, and it was like another 20 cents more, something like that. But when I look at the downside, okay, the most you can lose is $2, and you have to think, even if UVXY had moved down another buck or two, the spread is not going to go to zero. I mean, there's time to go. So I felt like there was more upside than downside here. And indeed, we got a $2 up move, which was nice. This made me long 600 deltas, essentially. So when UVXY moves up $2, we end up making $1,200. You can see here it shows P&L on the day 1549. Now some of that is because we got bad marks yesterday, but anyways, P&L opening 695. Now I've done some trades since then, but that's the essentially the position here. Right now we're still long 200 deltas, and so this was, once again, I bought the July 30-40 call spread. And so with UVXY up $2, I was looking to sell something against this, for something fat against this, right? When we get a pop like this, what they do is they raise the prices on all these call options because they know people are going to be coming to buy it. Now, first of all, the spread that I put on the 30-40 spread is one of the reasons that that's a good way to get long is that there's a skew here where the 40 call is a higher. If you were to look at like historical value, or if you were to look at the value of this spread just based on the Black-Scholes model without a skew, it would be higher than $2.09. The reason it is a good value, though, is because these 40 calls, which is the part of the spread that we were selling, are jacked up. There's a skew to the upside in all VIX products. This is just due to the fact that if it's going to pop, it's going to pop way up, and people typically buy these options. So the market makers move these options up. If you want more on the history of skews, they came about after the crash in the late 80s, and we have one in the S&P to the downside where out-of-the-money puts have a higher volatility as you move down, and out-of-the-money calls have a lower volatility. VIX products are the opposite, where as the option strikes move up, there is a higher volatility. And I can illustrate this if I pull down on our chart here, implied volatility. So you can see here, it's showing, okay, at the money, at the 30 strike, the volatility of 138. At the 40 strike, 154. And, you know, that's about 15 points, 16 points. And depending on how far out you go in time, 16 points is more and more significant the farther you go out in time, because we know that farther out in time, options have higher vega, and it's just going to be more significant farther out in time. If we were right before expiration, you know, a difference of 15 volatility points might be like 2 cents or something. So anyway, the beauty of this, one of the beautiful things of this spread is that if you were to look at the Greeks for this spread, right, when we put it on, it actually had us collecting money because, once again, this 40 call is decaying more rapidly than the 30 call just because it's jacked up so high. What I was thinking in my mind once I had the spread on and I wanted to sell something against it, I was thinking, okay, well, it's the 30-40 call spread that I bought for $2. So what can I sell that's higher up in strikes that expires before this spread that's going to offset that $2 cost? And so I went out to these options that expire in 10 days, and I looked and I found this call. Hold on one second. Let me switch this back over so you can see what the position is. But I found a call that I was able to sell for $1. It's this one right here. It shows $1.90 right now, but I was able to sell some of these for $1, or one of these for $1.82. And I figured, okay, well, $1.82, that's going to cover one of my spread, pretty much finance an entire spread just in 10 days. And so as I sold some naked calls, and I also sold some call spreads against our long spread here. And as I did that, I kept going back and looking at my Greeks here on the bottom and saying, okay, well, how does that affect my position? What is my delta if this moves up 50%? Am I getting in trouble? And we can look at the position now where it shows, okay, if we were to gap up 50%, we would still be long deltas up there, and we would make $3,000. However, our buying power would reduce a lot because we are short a couple naked calls. So that's going to affect, ultimately, if this were to go to infinity, we would be in trouble because however nice that spread is, buying a $10 spread paying $2, however much of a winner that would be if it went straight up, naked calls ultimately have an infinite loss if we go, higher and higher and higher. So, so anytime you're selling a naked call, or you have net short units, you want to pay specific attention to that and just make sure that you understand what risk you have. And here it's showing me if I, as I move the percentage move up, even up. If we were to gap up 100%, I would still be long deltas up there, and I would still be making more and more money as we moved up. So, but you can see my buying power here would be in a situation where I would have to buy in one of my naked calls and somehow adjust my position to adjust my buying power. But anyway, yeah, very seldom am I long vol, and I've quickly looking to cover my deltas. I am still long 200 deltas here, but I'll look to cover more and more of those deltas as we move higher. But it worked out this time, so that's great. It's always good when a position works out. This is I had good trade being short stuff last week, and now a nice trade being long stuff. So I wanted to show you that. And meanwhile, this is going to become a better and better opportunity to short something. Now, the dynamic that I'm thinking of this week is the FOMC meeting coming up is going to be an inflection point. And it's important that we realize that the FOMC meeting could be a point where volatility really, really comes in. And it's already going on. There is a blackout period before the meeting where the Fed can't say anything, but there's speculation as to the wording of this meeting, what's going to happen. And the speculation involves talking about, well, since the market's doing so well, does that mean that the Fed's going to ease up on the stimulus? Or is the Fed going to indicate that, well, maybe they're going to stop supporting the bond market? What are the implications for the rest of the government towards a stimulus package in Congress? All these things are kind of out there, and the market is going to be waiting to see what stance the Fed takes at the meeting. Now, there's a press conference, I believe, coming out tomorrow, and I'm trying to look at this right now. And it looks like they're having the meeting, they're having a lot of it on Zoom. But I believe there's a press conference with Powell tomorrow. And so we want to stay apprised of that. And you want to make sure that your positions are cleaned up and tidy and where you want them when that press conference happens, because that if stuff's going to move, it might be right then. And a lot of the speculation about, the VIX being up with the market up was around this press conference. And so we want to keep on top of this situation here and make sure that our positions are buttoned up and we have on what we want on and don't get caught kind of like halfway legged somewhere or something when this press conference is over. And I'm just looking here for release at 3 p.m. And I will put in the I will put down below exactly when the press conference is, because I don't want to waste your time like looking for the information right here. But I believe it is tomorrow. But yeah, it's been fun. It's been interesting for me actually being long a VIX product, because I never am. But over the weekend, I was long a couple calls, and it's like, for once, instead of there being the possibility like any bad news is going to like sink my P&L, all of a sudden it's flipped around, and either kind of like I lose a little bit, or there is the potential to do really well if we got a bigger pop. So it's kind of interesting. I don't recommend generally being long this stuff, because once again, there's more edge into being short it in the long term. But be that as it may, it worked out this time for the position here. So anyways, that's kind of where we are right now. I kind of recognize that there aren't that many people around to watch this, because I kind of just showed up online this time. But let's see what we've got here in the chat. Hey, what's going on, everybody? Say, what's up, Spencer? Let's talk vol. Spencer, FOMC meeting. Tom, hey, what's up, Tom? What's up, Devin? Let's see what we got going here. Let's wait to see what happens after the stimulus high wears off. Yeah, I was just talking to the manager of the building I'm in, and there's a lot of talk about at the end of July, people stop getting that extra $600 a month stimulus, and a lot of people have been like avoiding paying mortgages and rent. A lot of places were very nice and said, okay, well, you don't have to pay mortgage or rent for the moment. You can get us later. And that later time is coming up, so that's a little scary. What's up, Brett? Nice to see you. We got the whole gang in here today. That is awesome. But yeah, there's bad stuff ahead for the U.S. economy, and we kind of all know that. But everybody's on this kind of like, it's so dreamy rally here. I watched this, or I read this article yesterday, and it was just extremely euphoric. And it was saying the economy, it was basically saying, it took the stance that, like, well, it's obvious that the market came back, and this is just the very beginning of the market, of what we're going to see from the market, because, everything is great. The more jobs were created than we thought. Remember, that thing on Friday was a huge, huge number. We thought, or the estimates were that it was going to be the biggest job loss of all time. They were estimating like us losing 8 million jobs. In fact, the outlier lowest estimate was us losing 800,000 jobs, and instead we gained 1.2 million jobs. So that was a huge, huge, first of all, just proves once again, that analysts are full of hooey, because everybody missed this. And second of all, that was a huge yes for the market, because the market's like, that's awesome. The problem is, in my mind, is like, we haven't been through this sort of like shutting down the whole economy and then reopening it again. So it's very hard in my mind to judge like what is a good number and what's not a good number. Like, of course, when we go from everybody being at home, most people being at home and nobody working, to a lot of people going back to work, of course we're going to see indicators go up from when everybody was at home, or most people were at home. It's very hard to tell like what is a good sign of the recovery and what's not, because obviously we're going to see numbers turn around and look better when people go back to work. The question is, there's long-term damage from this stuff. Every time you just print money, that has to come from somewhere eventually. And yeah, you can keep printing money if you're the Fed or the government, but it's going to have implications down the line. And there's a lot of people out there just cheerleading the market and are saying like, this market proves that, whatever, the U.S. is great, the Republicans are great, the country, rah America, and all this stuff. But in my mind, the question is, where does it all go to? Like, where, does this market double? Do we double where the market was? And what does that actually really say about anything, the market being higher? Most of the U.S. public doesn't really participate in the markets. And what does that really mean? And I don't really have the answers for you. I'm just trying to kind of lay out some questions there for you to think about. I want to recommend you guys watch a video which I saw online, which I thought was very good and interesting. It's this guy, I'm sure you've heard of him before. He's a very famous interviewer on YouTube. It's called Valuetainment. And let me just pull up this video for you, and I will put it in chat. But he's got a great kind of stance where he goes through the pandemic, and he's got some great stuff he talks about. And one of the things he says is that the two political parties in America are like basically like two groups of rich people with different ideas. And that I like that, because it kind of states how like really the two parties are there for rich people. And I'll put this in the chat, this video, but very reasoned approach. I really like when people come on and have reasoned approach where somebody from both a Democrat or Republican perspective can look at a video and not be like offended or not start to just turn it off because, oh, that guy's signaling he's on the other side from me. I really like it when somebody can do that, can bridge the gap and provide some meaningful content that's not going to like ruffle too many feathers one way or the other. Yeah, Spencer's saying all of the mortgages are due for all the previous months. Yeah, and it's hard to tell what people are going to do, and I fear that people that were getting that extra $600 have squandered it, and some of them who had a mortgage to pay with it haven't paid the mortgage with it, right? Because human nature is as it is. Certainly, let me say this. Certainly, the good news is this whole COVID thing did not turn out as bad as was predicted. You know, there were some predictions that 10% of the world population was going to be wiped out, and it turned out to be much less serious than that. And part of it's due to social distancing, but part of it's just due to that they didn't understand exactly how it was going to affect people, and that's a really good thing. However, there's a lot of problems out there that have been created by this whole situation. And if you were to, let's say this, if the stock market was a judge of the economy, then it certainly shouldn't be higher than it was before this, because the problems from this were not resolved. We know the stock market, though, is not does not represent the overall economy. But how close is the stock market to the regular economy? What's the beta of the stock market to the regular economy? That's hard to tell. But as the TheoTrade guy was saying yesterday, even the most bullish people out there are kind of rolling their eyes at the rally that we've gotten. And it seems to me like the market is kind of in this state where it's waiting for the S&P to take out the all-time highs, and then it's going to shift gears. It seems maybe that's too obvious, but that's kind of what it seems like. Like we're waiting for the all-time high in the S&P. We've gotten the all-time high in the NASDAQ, and now we're waiting for the all-time high to appear in the SPX. And let's see how close we are to that right now. It looks like we're like not too far off of it. Okay, so we're about 200 points off of it. And, it seems like lately, now that the NASDAQ hit at the high, NASDAQ was lagging, but now S&P lagging. The Dow is very strange, and the Dow has been doing what Boeing has been doing lately. And if we look at Boeing here, Boeing gives back a little bit, the Dow gives back a little bit. I just can't believe people have been buying Hertz. I have the wrong symbol. Let me look up the symbol. This Hertz is like declaring bankruptcy, and yet people are buying it. Now, I don't know enough about this to even play this, but I got crushed being long SUNY as it went into bankruptcy, and so I will not be long a bankruptcy stock ever again, and that includes Hertz. But for somebody who understands it better, okay, so HTZ, for somebody who understands it better, this seems ridiculous. I guess the key is to figure out which of these stocks have been dragged along with this rally that just don't really make much sense. And it looks like, yeah, Hertz has given back a decent amount already today. So we're back down to 475. How high did we get? Let's see. All right, so we got to almost $7. It's given back a decent amount today, but this is just kind of falls into the irrational exuberance stuff. And once again, really mixed signals from the market today, with the NASDAQ up 77, E-minis down 22, and the Dow down 200. It's wacky out there, folks. So my advice to you is to keep it tight and be careful. There's certainly opportunities out there, but I wouldn't lay into being short vol because it feels like we might get a better chance to short this stuff. Certainly this is a better level than a few days ago, but if we look at the chart of VXX, we see a little poppage. You know, this just brings us back a few days, though, the pop that we've gotten. It feels like a lot, but it just brings us back a few days. You know, the VIX really not that high, 27 now. Well, it's all relative, right? Some people would say if the Dow makes all-time highs, then the VIX is way higher than it was last time we were at all-time highs, and thus the VIX could go way lower. But in the meantime, with markets moving around and us, you know, if the S&P starts ripping outside the expected move, then realized volatility is higher and the VIX is justified to be higher. And we're starting to move around a lot, and so that's why you have your VIX higher. But this is a tradable market. There's money to be made on both sides, and I would be careful, but this is like a trader's market right now. This is a time to jump in there and make some money if you can do, you know, if you can be intelligent about it. And I encourage you folks to jump on there and check it out. Let's see if I can find my way back to the chat here. And yeah, check out that Valuetainment video. Pretty good. That guy's got all kinds of great stuff. He's like interviewed like every mob boss who was ever out there. But he had an interesting story. I did not know that he, you know, son of immigrants from, I believe, Iran, and just fascinating story about him. But yeah, check out that video. He talks about the discrimination, a bunch of interesting stuff, and a very reasonable take on things, which once again is something that I aspire to as well. What's up, Mac Radio? Right-click New Tab. Oh, I'm sorry it took you off the stream. Yeah, I'll put it in the description. I don't want people to click off the stream. That's no good, right? So, you know, UVXY continues to rally with the NASDAQ rallying. So on days like yesterday where we've got the VIX up with the market up, it seems like a decent time to maybe go along this sort of thing. I have to look at it a little bit more, and it kind of depends on a lot of other things. But really stuff acting wacky right now. There's a big 1x2 spread traded in the VIX yesterday. So if we go to VIX, we can take a look at that quickly before I let you go. Let's go do that. So
TL_K Varson 1747 ends the channel.
1 second.
You joined City Skylines.
Hey, Lincoln.
Hello.
You joined Idle.
Sorry about that.
You were suppressed.
Yeah, so there was a 1x2 put spread that traded in the VIX, and what it was that they paid 13 cents and they bought the 25 put and sold the 30. They bought the 25 put, sold the 23 put, and they paid 13 cents. And it looks like that's not going to work out because we've moved kind of away from there, but let's just model it really quickly. So we buy the 25 put, and we sell the 23 put 2 times. And let's take a look here. Analyze trade. Anyway, so this spread went up 14,000 by 18,000 yesterday. So a pretty big trade here. 14,000 by 28,000. So that's showing, and I believe they bought. The. I believe they bought the 25 put. So yeah, so that's going to get you short some deltas, and that's not going to work with us popping today, but it might work in the future. Target equals blank. Let's see, Tom, are you looking at HTML code for a new window and a link? The A will do. Oh, you're much better than I am, Mac 7 Radio Intercept. Anyway, so this big VIX trade went up, and we have seen VVIX pop, and usually I try to dig into the numbers to see what's making VVIX pop. Let's try to do that once again today, and we'll look at time and sales in the VIX, and we've got, let's see. And what we can do, if I quickly get out of the way here, is we can sort stuff on Thinkorswim by size. So if I go under, if you're looking at VVIX, you want to look at time and sales for the VIX options, where these would be options that are hedged with futures. And we can see the biggest trades today, kind of a mixed bag, puts and calls. So it used to be a lot easier with VVIX because most of the trades used to be people buying out of the money calls. And thus, when you saw VVIX going up, you knew that meant, oh, there's out of the money call buyers in the VIX. And thus, VVIX going up meant that people were getting nervous. But these days, when you've got put buyers, it could be people are betting that vol is going to come in when VVIX goes up. So I don't think VVIX is like the greatest indicator. Dave, this VIX being up is a hint that some in the market think the rally is fragile. Yeah, I would say that. That makes sense. There's people buying stuff. You know, the most basic interpretation of the VIX being up is people are buying options in the S&P 500. Now, usually that means people are buying puts to protect their portfolios, but it could mean people are buying whatever options. It could mean that people think that this is going to rip to the upside and they're buying call options. So we can't tell precisely what it means, but it generally does mean, yes, that the rally is a little suspect when you have the VIX at an elevated level. Maybe Brent would ring in with a slightly different interpretation of that. But yeah, definitely when we have days, if you look at, if you go back in time and look right before there was a market, like a big rip down in the market, a lot of times the couple days before, like the Vomageddon, a lot of times a couple days before, it will be like market up, VIX up. So it makes me a little nervous when I see that. It's like correlation. Generally, when you see the market up, you should see bonds down. Generally, when you see the market up, you would see gold down. If you see the market down, you would see gold up. These are like correlations that tell you like everything is right in the universe. But when stuff isn't correlating right, it just puts that out there that like maybe something's up. And certainly the VIX cranked up makes you wonder, maybe something's up. Now, it's hard because we are still coming off of the spike from a couple months ago. If we look at the VIX, we are still, we're on part of the real estate of that spike. And so, the theme is kind of like we're coming down off the spike. And so until we can put some distance between us and this spike, that's still kind of the theme. And look, when we look at the chart like this, you just see this little teeny up move, which is the pop today. So when you look at it, in this perspective, it's just a little blip on the screen. Now, if this extends and it pops to 40, all of a sudden, well, maybe there's something new happening. But as it is right now, it's just a little blip on the screen. I do think it's worth trading the 5-day correlation of the Over single days, it's meaningless, but it happens over 4 days. It could be an early indicator. Yeah, definitely. And I love to, anytime I get the least bit confused, I love to back out, right? If you're in the thick of things, you're looking at UVXY here, for example, and you're looking at the chart, and you're like, oh, it's rallying today, blah, blah, blah. Or pick your stock. It's very useful to back out. Oh, I'm going to back out from an hourly to a 10-day. Oh, okay. Well, when I look at it like this, yeah, there's a pop, but it only erased like 1 or 2 down days. This could just be like it's trading in this range and it's just up high in the range right now and it's going to come right back down. It's kind of like, if you are on the ground, you don't really understand what's going on. But if you climb a mountain or if you get up above the ground, fly your drone up above the ground, then you can kind of get a different perspective on things. I recommend people do that. And today it kind of seems like there's a fight between the NASDAQ and the S&P, right? The NASDAQ all of a sudden up 80. You'll notice when the NASDAQ starts pushing up, the other indices, they may not always follow exactly, but they kind of respond. And it seems to be a push-pull between the NASDAQ
entered channel
and the other ones today. Apologize for that. Stay with me just 1 second here. I'm going to have to... There we go. All right. Yeah, all right, so that's where we are. I want to wish you guys the best of luck. I don't know. Do you think it's lame that I'm putting on long positions after having a channel about how to short the VIX that I put a long position on? I don't want to get people twisted around, and I know there's some people who have been following some of my short positions. Short positions are still going to work long term. I just chose to switch things around here to show people, well, because I thought it was the best way to make money right now is why I did it. Covalo 07, I like to watch the spread between VIX 9-day and the VIX. Yeah, definitely. And you'll notice in the Facebook group, this guy, Bernard Vermont, has been talking, he has all of these graphically illustrating spots that talk about the VIX-D and other indicators and when they cross each other. And he's been doing some interesting work on talking about the relationships between those two. And I know there are a lot of other people out there who are very careful about watching, like when the close-term VIX crosses over the farther out VIX and this kind of stuff, and use that as indicators. I personally don't. I'm more of a feel. I hate to say feel trader, but I more just evaluate the totality of what I see in the market to base trades on, than having specific indicators. But people do use those certainly to assess the current situation. And I certainly take them into account as well, but I don't have a specific mechanical way of viewing these things like many other people trading the VIX do. All right, well, it looks like I've taken up enough of your time today. I appreciate everybody watching. Thank you to the Patreon supporters and others who support the channel through memberships in YouTube. It's much appreciated. I'm going to have a little prize for all of you. I know I've been saying this for a while, but I promise I'm cooking something up. My graphic designer, one of my graphic designers is back from Florida, so we'll see what we can cook up. Anyways, appreciate the support from everybody. Best of luck this week. This is a trader's market. Jump in there. Use the tools at your disposal, and hopefully, I love hearing stories about you guys making money, so hopefully you do this week. Best of luck, and I will see you on the next show. Thanks for watching.
David Lincoln Productions.
Bye now.